Joining us on the line is the Managing Director, Terry Davis. Terry Davis, thanks very much indeed for joining us. First of all, you said in your statement, undoubtedly this is the most challenging year the business has faced in over a decade. Why so?
Well, I think if you look in the core markets for us of Australia and New Zealand, we had the big floods, as you know, in the first part of last year. Christchurch, of course, went through a debilitating earthquake. The concerns over the carbon tax that were floated through the middle of the year, concerns about the overall global slowdown, I guess, and what was happening in other parts of the world, and the high Australian dollar meant that there were less tourists coming into Australia. But for us to come out with profit growth when many of our competitors went into profit decline, we were pretty encouraged by the overall result.
So what about this year, and how's that for you so far?
Well, I think that we saw in Australia a drop in the interest rates in November last year. We were hoping for another drop earlier in February, but that didn't occur. For us, it'll be a component. Our Indonesian business and Papua New Guinea business continues to grow very strongly. We had 17.5% profit growth in 2011, and we'd be expecting similar sort of growth levels for 2012. So they're the upsides. I guess there's still a lot of concern in Australia. Consumer sentiment's still not strong. We've got a strong promotional program leading up into the Olympics. Coke, of course, is a big sponsor of the Olympics, so we'd expect to get some higher consumer offtakes up that. But I suspect that in 2012 will be another year similar to 2011 that we'll need a couple of catalysts like a drop in interest rates here to start to see the consumers start to take their hands out of their pockets a bit more.
Absolutely. And what about the strength of the Australian dollar right now? How's the Aussie affecting your business? Because on the one hand, I'm sure that it gives with your imports becoming cheap, and on the other hand, your exports become more expensive.
Yeah, you're exactly right. It's a sort of two-edged sword. On one hand, your key commodity prices go down, but we see increases in sugar prices, increases in aluminium prices, so that offsets that to some degree. But I think I saw some numbers the other day that said that there was 1.8 million tourist movements offset. In other words, more people going out of Australia for their holidays than coming into Australia. And obviously every time that somebody goes out of the country, it's one less Coke they buy.
Absolutely. Now, tell me another thing as well. It's about the SAB unit. Of course, you sold that off, well, to SAB, I should say. Do you get back into the beer industry, let's say, in 2 years when your lockout ends?
Yes, well, certainly that is our clear intent. In terms for our major customers, they don't have a lot of choice at the moment. They still have to deal with the two major brewers in Australia. And so from a customer perspective, there's certainly a high expectation that we move back into beer at the end of next year. And also, if you're an international brewer, generally speaking, you don't want to deal with your competitors. So we offer an independent platform for both the manufacture, the sale and distribution of premium beers in Australia, and we will fully expect to cement that towards the latter part of next year.
Okay, I understand that you're doing due diligence on, well, Foster's as spirits and ready-mix drinks brands. When do we get a decision on that, and, you know, how will it fold into your business?
Well, there are three elements of the potential spend for us. There's the non-alcoholic beverage business, which is a bit of a no-brainer. Then there's the spirits business. We're still waiting for a fair amount of information from the due diligence. And there's a very nice little beer business in Fiji and a good distillery in Fiji, and that looks quite promising also. But we'd expect to make a decision over the next few weeks on that, with any transaction that does occur will occur before the middle of the year.
Quick word on carbon dioxide. Of course, it puts the fizz into all your fizzy drinks. So there's been a bit of a shortage there in Australia. How do you cope with that? And are you thinking about setting up your own CO2 plant?
Well, I think that we had to do that in Indonesia 4 or 5 years ago when there was shortages in Indonesia. We didn't think we'd have those sort of problems in Australia, so we were a little bit surprised when we did. But the Indonesian lesson taught us to carry much higher levels of CO2 across our manufacturing operations, and touch wood, we've been able to get through the summer period in a way. Having a sort of softer summer helped us, but certainly we'll be sitting down with the key suppliers to work out how this won't happen again, or CO2 self-production will certainly be something that will be on our agenda.
Terry Davis, thank you so much for your time. Terry Davis, the Coca-Cola Amatil Group Managing Director, joining us on the line there from Sydney.